almost forgot. There we go. Let's do this.
Oh my God.
Nice.
The topic of the day is, banking as a service and sponsor banks and FinTech, but there's a whole lot of institutional, products out there. And we internally call them, FI FinTech. So these are products like yours that are built to be ran right into the bank as a new product, as a new service to enhance your banking experience, right?
Yep.
And that's really what you guys focused on there, as well as your new company, is that aspect, not necessarily a banking as a service FinTech function over there. What do you think of the differences and where that really goes?
I call it bank enabling. And I don't know if that term has taken off in any way, but I think it's pretty simple to understand that we care about the bank. Now, don't get me wrong. Array has a vertical totally focused on those FinTechs that are partnered with these banks through these banking as a service relationships. My job, though, is to get the FIs as direct customers of Array. We call it bank enabling because, it's just a total FinTech means a lot of different things. When you say FinTech, you could think, oh yeah, this is the banking as a service route, right? We're partnering with FinTechs to go and get more customers. The FinTech is the brand and the bank is the product at the end of the day. For us, this is bank enabling. We're allowing you, without another brand, this is under your bank brand, to make that digital experience stronger, to better understand your customers, to support their financial wellness as the institution, because people like Credit Karma have for too long sold to your customers, right? And so instead of displacement, because I can't get my credit score from my institution, now we're bringing that back to the bank so that the bank can own that.
So can I jump into a little, as long as we are way off on our vocab, I keep saying we've got a bookend. This is what I mean by a bookend. Okay, so Jacob, I've been playing with the same topic you're talking about.
Yep.
Let's partner with somebody. Let's just throw out a crazy example. What if you could partner with Chime? Well, maybe, I don't know, it sounds crazy, right? But even if you did as a banker, there's not any bookend that stops them from pushing your customers all over the place. What we're seeing a lot right now that's super positive is hey man, we'll take it a little bit further on our side, send your bank customers to us, but we're going to bookend it and make sure that we're not pushing them out to other places, and we're going to filter them back to you. So that's what I'm calling a bookend. Does that make sense?
I love that, because we're really talking about, hey, I could launch this really cool FinTech and go through your bank, and it'd be really neat for all your customers to use this thing. And then we enabled this direct deposit feature.
Right.
Oh my God.
Exactly. So you don't want as a bank, you don't want your partners to have too much crazy ideas, right? And just suck everybody out of there. So it's to your point, Jacob. And I really like the fact that you guys see that problem and are actually attacking that problem intentionally of being the bookend. Does that make sense?
It does. I don't have to teach anybody anything. It's what your credit report should look like. What the factors are. Now it's a matter of you actually owning that for yourself and providing that to your customers. Keep them engaged, have that warm and fuzzy feeling that they feel protected. And then of course, know their needs so you can sell them the right products at the right time. And that's how our banks make their money.
Love that. Good job. Now, that was well stated. We see this a lot where bankers have a fundamental misunderstanding of FinTech and banking as a service, and the idea that, well, how does this help my bank? I'll build our brand. I'm like, no, man, you're building their brand.
Right.
They're paying you money to run the process here, as opposed to the products that we're talking about now.
Traditional, very traditional.
Traditional ways to increase your bank and make your bank better. Mm-hmm. This is all about
take care of your brand.
It's about your bank.
Mm-hmm.
So
I will say though, we have an approach where, we can still power almost like a marketplace for an institution where they know that that's not their forte, or they don't even have products in that space. So let's use insurance as an example. I just sold a customer a mortgage. Now what's the next thing that they need to do? Buy home insurance. So we can actually, based on the information from a credit report, whether they got the mortgage with the bank or another institution, know, hey, this person is in the market for this product that we don't have, but the bank can still create revenue by owning that experience and passing it to their partner, where they may get, a percentage or a flat fee because they were essentially the lead gen platform for that insurance product.
You're bringing up something interesting though. I've been seeing it. It's definitely an emerging trend, right? Let's call it like a secondary brand where the bank is the primary brand, but they're playing within something not dissimilar from a Credit Karma, right? And it makes a lot of sense that Array would still have some brand presence because then you get some level of consumer trust, even though it's not direct to consumer, right?
Mhm.
When I think this makes a lot of sense. Think about something like P2P, as Zelle is a great example, right? It's still got some brand awareness, although the big banks, right?
You need to
But some of
trust
the
it.
guys, yeah.
You need to trust what you're working with. I think for us, maybe you'll see Array in the T's and C's because the customer does need to opt in for the service. You can't just pull credit without being compliant. But ultimately, like it's the bank that's powering the whole thing. We're giving the bank all the glory, all the notoriety. Like what we care about is really kind of building our brand to those CEOs of each of these banks, to the NCRs, the Jack Henrys, the Q2s of the world. So, honestly, Zelle, it's a very good point. But ultimately, I think what we care about, especially on the front end of like getting the customer to opt in, is providing the bank with the right messaging so that people know what is this, what's the value in it, who's owning this. And the answer of who's owning this is the bank itself. It's not Array. We don't want any of that.
Got it.
All right.
Got it.
There's a neat aspect of this of a bank product delivery, and then there's maybe a behind the scene product delivery.
Mhm.
But in
Exactly.
whether somebody goes to Venmo, whether they go to Zelle, if they did it through you, the bank, you've still won the game. But when they leave,
Exactly.
when they leave your app and they leave your bank and they're walking down the street going into a taco stand, they're a completely different game. And that's what we see so much of today is that you go to Coinbase to do, what I mean? You go to different places.
And now Coinbase is launching the damn credit card. Did you guys see that? I'm like,
Exactly.
oh, you can take Ethereum and swipe your card at the gas station.
Yeah.
That's that bookend I was talking about, Jacob, where I would love to partner as a banker with some sort of trading platform. So I have crypto trading. I like Unify Money personally. But being able to bookend that so somebody doesn't show up and start offering people a credit card, right? Oh my God.
Well,
yeah.
That's why there's two types of partners, right? You've got the NYDIGs of the world who are totally focused on the banks, right? And then there's the Coinbases of the world who have built that sort of consumer play that may not be interested in partnering with the old-fashioned bank. However, those anti-banks paved the way to show the banks, hey, look, we just acquired, say, 100 million users.
Mhm.
We know which one that might be. Now you need to do it. And here's another company that comes along that we're not proving the concept. The concept has been proven. So I don't need to do a POC with a bank. What I need to do is figure out how do I integrate with all your legacy core and digital banking products, because that's where it's going to live at the end of the day. That's the hard part. It's not like, will this work or not, is not a question that we're seeing.
Well, that's why I'm super intrigued, right? Because we're seeing, I think for a number of years there was the sort of the FinTech group that was, it wasn't just that they were anti-bank guys. They were like anti-bank technology, like our whole crowd of people they didn't like, right? And so I remember a lot of times I'd be working with some FinTech folks and then I'd be playing with some bank tech folks. And it's like, those guys are the enemy, and they're the same way, right? Going back and forth. It's like, ugh. And now I
like
think
that anymore.
Right. It's starting to integrate a little bit. Everybody's friendly across the aisle, and that's cool to see.
Upstart is a great example of that.
Yeah.
They're working with Drummond Community Bank, a bank that we're very closely, working with as well. And so we hope that, Upstart is a great way to bring in consumer customers and selling them loans. Then comes Array, who can actually power the credit experience to help them build that credit and then upsell to other products that the bank might have, like a mortgage or a credit card or whatever it is that might be. So that's really a beautiful combination of like a company that was direct to consumer. Now they've become bank friendly. You've got the bank in the middle that's going out and pulling in Array to power an experience to kind of keep that customer involved.
Yeah. You said something that grabbed me a minute ago about kind of figuring out the marketing traps, right, for the bank. I think about this through multiple lives now. A lot of successful companies will have seen and been a part of that. That's core ethos, right? We've got to do sort of brand best practices, package everything up and hand it to the bank, right?
Yep.
It's sort of like the old guys know that. But what's funny is if you think about this, I've heard fintechs described as sort of basically just marketing companies. I think that's a cool analogy, right? Not a ton of software, but mostly front end, let's say, right?
Brand.
And definitely good marketers. Banks theoretically less so great at marketing, but they've got the customers. And we all know customer acquisition costs. You want to go direct to consumer. I mean, you're talking, give me 20 million bucks, right?
Yep.
And so we're seeing that shift as people are focusing now on, hey, I can build super cool products, but how do I take them into the bank ecosystem? It feels like all of this stuff is coming to a positive play for banks, right?
So I went from the old gray-haired white guy to the coolest sucker you've ever seen because I got the banks. So I can take the banks and say, here's what they're really trying to say in English. And this is how it works in the DDA level and how we feed this back to an FBO account. And everybody's like, I understand now.
Yes.
Okay. So really all they're doing is just popping something from their account onto a prepaid. And then we're going to bend that into a line of credit to do a credit builder. And I'm like, exactly. That's what the guy was trying to say. He just didn't have the education level to say it.
Yes.
Hey, were you trying to say that you speak bank? Is that what it is?
We call it bankanese.
Bankanese. Got it.
Yeah.
Yes.
If you don't speak it, then you can't sell into this vertical.
Yep.
The other thing, and I would encourage everybody, is have some damn respect for the guy sitting on the other side of the table. There's something there that they're suspicious of. There's something there that they need a question answered. And it's your job to answer those questions.
That's why you got to get close to the regulators, because that's going to be the number one reason that a bank might, push back or have to ask the additional questions, or because they're a highly regulated industry. If you don't know what the bank's being told, then you can't work with, you just can't. And so that's a huge edge. And I just want to go back to something that nobody knows about me, but my first job was at Bank of America in the branch at One Bryant Park in New York. I was, whipping credit cards for a living for a full year of my life.
Actually, balance the color line.
Yes.
Yeah.
Never, ever, ever did I think that experience in a retail branch, wearing a suit every day, shaving my beard every morning, would be the best experience for now Array, where huge aspect of our business is serving those retail customers and selling them retail products, but digitally. Right now, it's not about teaching every banker in the branch how to talk about building credit. No, it's all in the app. So it really came full circle for me. Now,
That's a great story.
I was a banker, right? It has nothing to do with, the stuff that people at the top, these executives at these banks deal with on a regular basis, whether it's, strategic planning or compliance or regulations. I wasn't exposed to all of that. That industry knowledge came from actually the venture center,
right?
And plug and play before that. But, somehow I put it all together and picked the winner with Array, because we're a freaking rocket ship at this point.
The big question I get from bankers, right? How would I vet fintechs or bank fintechs, right? And I always tell them, like, I can do it, or I do it all the time, right? Without even looking at the product, right? Would you feel the same way of, man, I talk to the founders, I know their background, and I can just tell you, like, are these people winners or not? Because the junk is the junk, right? And the innovation is the innovation, and there's the stuff to figure out. But like the people, that's always 100%. The special part.
So it's the people, but I will also say the first question you should ask is, what other banks are you working with?
Right.
Because it's the proof is in the pudding, right? Have you gone live? Who are your partners? And a lot of banks ask it, like, you're not going to get a deal. You got to work your way up. You really got to start with the community bankers and the credit unions. And I know it's a dirty word, but look, they're willing to take a little bit more risks, as well as like less political, I would say. And you got to prove the model, show the ROI, and just work your way to the big boys.
Okay.
So when we get out of this thing, what integrations do we already have set up so that we're ready to go? And I don't mean just basic sandbox bullshit. I mean, really have a bank at live, have this thing working good. And okay, now we can move to the next integration. There is an order of events for each product that where it makes some sense. So it's kind of easy for us, since we have all that information, to be able to say, this guy has a path to victory, this guy doesn't. And that's something that you had done really well working with these guys. The two of y'all had worked out a really good dance there to help information and share that to get people on their way.
The first second that I joined Array, I got on the phone with you guys. We looked at, okay, Array lives inside of mobile banking and online banking, but we can go with mobile banking because I found out that 80% of the time, mobile banking is the same as online banking. From there, we said, okay, now I need to know, based on our verticals, community banks, credit unions, regionals, and money center banks, who's working with who. We broke that down. We look at the top 10. We threw it into Salesforce. We look at user counts because we know how many people are engaged on a regular basis with their mobile and online banking. And then boom, the whole market was mapped out in day one. Now, instead of somebody saying to me, how do I know what banks to work with? You should never get on a call without knowing the entire loan portfolio of that institution.
And that you should be on the call.
Yeah. How many mortgages are you doing? How many consumer loans are you doing? How many credit cards are you doing? I need to know all that before I speak to them, because then I know exactly what they care about. So from the email that I'm sending to get them on the phone, to the digital banking provider that I'm going and talking to try to get an integration to serve all those companies that I need to flip it on for, it's all calculated, and it all came from you guys, literally all of it.
Thank you. So really, for the rest of the planet out there, what he just said was, if you're going to find, I need to do a distribution path and find out who owns which piece of that market and what are the numbers behind each of those players. So
Pre-qualify.
An easy one, man, would be like Q2. If I'm going to integrate to Q2, how many banks does Q2 have?
And what do those banks care about, right? Oh, a lot of them are doing commercial.
That's it. Okay. And then we run our little qualifying report like this that says, here's their loan breakout, here's their portfolio.
Final thoughts, man. What do you got?
What do I got?
On the spot. That's my favorite part.
Use math when you're creating your partnership strategy. Come to the table with something, because if you don't, you're just like the rest of the other 99%, emailing the head of product strategy at the F's or the J's or whatever, the Q's, whatever you want to call it. I would say the last thing is you got to make real personal connections, because you're going to see everybody at least 6-7 times a year. And, you got the AFTs, you got Finovate. We'll be at Money 2020 in a few weeks. I'm seeing the same group time and time again. And so, it's about the relationships as well, just as much as it is the math. So that's my closing point.
Awesome. Thanks for showing up with the hat, man. We'll give you the swoop out.
Right.
Thanks for riding with the FinTech Cowboys, man.
Thank you guys. We love you as a partner.